Let's go ahead and get started. Hello and welcome, everybody. My name is Jason Allen Jankowski, the Lion of LaSalle Street, broadcasting to you live from Sarasota, Bradenton, Florida. Beautiful down here for all those in the United States that might still be digging out from the latest snowfall. Come visit if you like. Beautiful day down here. We're going to do a presentation today on Net Winning Trader. I don't know where your background is with regards to your market knowledge. So I'm going to be taking things in a direction here that may surprise you or encourage you, or hopefully will be the missing part to what you're already looking for, which is a way to improve your gains, because I know that's what you want to do. I've been trading a long time now, and I can tell you that that's why we do this. We do this because we want a better life, more money that can give us that better life. And of course, we all know it's not everything, but a lot of money can really help. That's what we're here for, right? So let's go ahead and get right to work. I just want to encourage everyone to remember that we're going to have time for Q&A at the end of the broadcast. You can save your questions till then. I also have my co-host with me today, Tony, who is my business partner, helped me create this product and is assisting in helping clients understand how it works. He'll be available to answer questions too. So whatever question you've got, feel free. Just put it out there and we'll have plenty of time at the end of the broadcast to discuss it. So before we get started, though, I do have to mention that trading is a risky business. It's trading in futures, options, Forex. It involves some risk. People do lose money, can and do lose money. Some cases they might lose more than they invest, rare cases. And you need to carefully consider if trading is right for you in light of your current tolerance for risk, your current financial position. It's not for everybody, but if it is for you, we'd love to have you as our client. Always remember that everything we discuss in here today is considered opinion. It's changeable. It may or may not be subject to revision or renew. Results may be shown, but they're hypothetical, and there's no guarantee or warranty about profitability. And we're doing this for educational purposes, not to assume that you will trade through us or make money because of what we do. We're not providing any personal financial advice. However, now that the regulators are happy, we can get to work with showing you what we do different. Now, we call this broadcast The Difference, and I'm going to show you that in a minute. But first, I thought I would take a minute and answer this question because, I see a lot of new names in here today, people that I haven't personally spoke to before. And I'm sure you're going to want to know, who is this guy, right? What is it that's different about JAJ? Well, I want to take a minute and introduce myself. So indulge me. I just want to share with you a little bit about my background. I've been trading for almost 40 years. I started as a customer, just like you. I opened an account at a brokerage firm and went to work. And I did my very first trade in Chicago Board of Trade, big board, Chicago corn in 1986. And I was absolutely hooked. And I knew this is what I wanted to do for my career. So I quit doing everything I had up at that point, and I got Series 3 license and became a commodities broker, living and working in the heart of this business at the time in Chicago, Illinois. I've made and lost money, and lots of it. You may notice that there's $7 signs here. I'm sure we all know what seven figures is. I'll let you figure the rest out. I'm self-taught, self-educated. That means I'm doing the exact same thing that you did or are doing now, except that I spent lots of money on this. I quit counting at around 50 grand, but conservatively, I probably spent somewhere around 100 grand on the information that you can get mostly for free now because of the internet. When I started in 86, there was no internet. There was no email. There was no daily market updates. There was no CNBC. There wasn't even cell phones or ATMs, for crying out loud. It was the Stone Age, really. And I had to learn everything that I learned by doing some very difficult things. I had to literally find periodicals and newspapers that had to do with trading and go through the classifieds and call people and ask for their time. I knocked on doors at the Board of Trade. I'm actually proud to say that I had a chance to meet George Lane, who was the inventor of the technical analysis called stochastics. His office wasn't far from mine at the Board of Trade. And I asked him to explain to me and teach me how it works. And I've read countless books. I've done seminars, weekend retreats, personal coaching. I've done anything and everything that cost any kind of money you can think of to get educated about this business. And I can very confidently state that if there was a PhD in markets and trading, I would have it. So I know what you're going through. I know how hard it is to find what you're looking for. I'm also a published author. Some of you have read my books. I have 4 market-related titles out and available right now. I'll be happy to give you the details on that. I think they may even be posted on the website. But if you have read 1 or 2 of my works, I'd love you to read them all. I've developed several manual and automated trading systems to assist people in their pursuit of market profits. And I've mentored hundreds of full-time traders from around the globe over the last 20-some plus years of coaching. And why do I tell you all this? Well, the reason I'm telling you all this is not to blow my own horn here, and it's not to try to convince you to buy something. The reason I'm telling you this, guys, is very important. It's this. What I have to offer is heavily vetted. I know what works and what doesn't. Absolutely, without a doubt, I can tell you, and the reason why our program is called Net Winning Trader is because net winning traders all have things in common, and I know what those things are, and I can share them with you. If you want to be a net winning trader, there's certain things that you have to develop, you have to work with, certain things you have to agree with, you have to change your behavior to match that which is required. And that's something that we need a little help with. It's not that easy to do all the time, which is why you need a little direction. And that's the purpose of what we offer. And that's the difference between what we do and what other people do. And we're going to talk about that right now. Let's talk about what we go through every day. Now, it doesn't have to be like this anymore. And I'm going to show you something. I'm sure you're going to agree with me. Anyone ever experienced this problem? Oh my God, what just happened? I didn't expect that news report to be that way. Oh man, what about this? What about that? Should I get in? Should I get out? What if I put my stop too close again? Why does this always happen to me? How about this? I got out with a nice $500 gain. If I would have waited till the end of the day, I could have made $1,000. Why did I get out too soon? How about this one? Well, what do you think, Bob? I don't know. What do you think, John? I don't know. Well, the Fed news doesn't come out till noon. They're going to maybe cut rates. What do you think? I don't know. Well, I'm a little worried, though, because even though we look like we've got an opportunity here, that I can't understand why the gamma is moving on these options and the delta isn't. That doesn't look right to me. What do you think? I don't know. You want to give it another hour? What do you think we should do? I don't know. Well, why don't we just take a second, because we're not at risk right now, so we can afford to wait. And of course, all this emotional froth and asking questions that don't have answers. What does this do? It boils around inside your head and comes out like this, month after month after month. This is your equity curve, right? Doesn't have to be like this anymore. It don't. I can tell you why. It's because you're doing the right things for the wrong reasons. See, this is the problem most traders have, but the secret behind the problem is the real issue. And the issue of what is motivating us to focus our minds and our efforts into the areas of trading that really don't create the profits for us. And we are ignorant of this for the most part. What typically happens is that the average trader knows, and everybody listening will be more than happy to confirm this, I'm sure. The average trader knows that something is missing, or something still needs to be learned, or it's out there somewhere. It's available from something or someone. And the average guy knows his trading will improve if he could find that. but the trader doesn't know what that something is in most cases. That's why we do this. Go to weekend seminars and webinars on the web. That's why we're doing all this. We're looking for that something that's going to make this really work for us. But we're doing it for the wrong reasons. See, it comes down to perspective. It's your perspective. See, the secret sauce that most traders are missing is this understanding. Successful trading is all about developing a fresh perspective, a winning perspective, the same perspective that is used by all net winning traders. Find a guy who makes money month after month after month, if he's willing to talk to you, which most of them don't need to, but ask him. He'll tell you. He's doing certain things that you are either not sure you need to do, therefore you don't do them, are ignorant of, just don't understand what they are. Or he's doing something that's so radically different from what you're doing, you don't want to make the change. Now, where does this problem get started? Well, I call it this: how they see it, how we see it. Now, the reason I call this webinar The Difference is because I'm going to show you that difference. I want to share a few things that I think illustrate the big difference between what we do here at Net Winning Trader and what most of the training that's out there is teaching you to focus on. Now, you got to remember, I'm asked to do these broadcasts similar to this kind of broadcast. I do them all the time, every month, a couple times a month in some cases. So all through 2023, I was doing these broadcasts, different speakers. We're all part of the roadmap. And this, what I'm going to share with you in a minute, is a screenshot of just one of the other presenters that Tony actually captured for me and gave to me to show you this difference between us and them. Now, let me just show you this real quick. Okay. Doing the right things for the wrong reasons, which is what? We're trying to learn more about the markets. We want to learn more. That's good. But the wrong reasons are this right here. What the heck is this? So this person is out there training others, and they seem to make money, but, do they really? This is a chart with some kind of wave pattern on it. I think it's Elliott wave. And some of you guys would say, well, yeah, it looks like Elliott wave to me, right? On the left, this is a real-time chart with the actual open, high, low, close of the bars. And then there's all this opinion on here. There's scratches and dots and ratios and lines and curly cues and everything. And it's supposed to match over here on the right, which is the ideal thing. And then if you look over here, they've got some commentary, the average or typical move, slower than the average move off of the average price is. There seems to be some kind of deep understanding that they're trying to convey to you. And there's all this qualifying language that says maybe, maybe, maybe. And all these squiggles that show you this, that, and the other thing. And what are we trying to do here? What's really going on here? What's supposed to be happening? Why has this one been selected as the example? Right? Is this the way? I had one client tell me he's not trading anymore. Why is that? It's too complicated. It's too complicated. How's it complicated? Buy low, sell high. He says, well, I, studied Elliott Wave for 8 years. And boy, that is the most sophisticated thing I've ever tried to understand. I still don't understand most of it. And if I got to know that to make money, I can't do it. So you don't need to do all this. He thought he did. Misconception. What? Perception. His perception was an error, but he didn't know that. So contrast that with this. So I'm going to take everything off the screen and tell you, sell somewhere up here and buy somewhere down here. So sell high, buy low, that's a winning trade, right? Now, most people look at this and hear what I'm saying. They go, oh, come on. You expect me to believe that, to sell somewhere up here? No, I'm going to tell you what you need to look for. And what I'm going to try to tell you is this. What do you need to get in order to win? You've got to be able to sell a high price. You've got to be able to buy a low price for that winning trade to process. But the thing is, how's that going to happen? It's going to happen because of something called the order flow. Now, I don't like talking about order flow to neophytes or new traders or people I don't have a relationship with, because they immediately automatically tend to think that that's just another form of technical analysis. It's not. It is the machine that the market actually is. When an order comes into the machine, it has to be matched with somebody else's order. When that happens, a price prints. So when that changes, when the order flow changes, the price moves. But you and I and everybody listening, nobody is ever going to know what that order flow change is going to be ahead of time. That's why technical analysis, in my opinion, is useless, because you cannot predict price action. Because how are you going to know what the price is going to be until the orders get into the machine? And you can't tell what the orders are going to be until they get there. So what's the problem here? The problem is we don't know what the orders are going to be, so how can we reasonably participate? Because the orders are the only thing that make the prices move. And once the price is moved, somebody's at risk for a loss. And once that loss becomes big enough, they have to liquidate. So how do you make money in this business? You make money by being on the right side of a liquidating move. And that's all that this is. I teach you how to understand what this looks like so you can participate with confidence. What this is right here is the market was basically moving in a sideways price action, which means the market order flow is basically balanced. There's about the same number of buyers squaring off against about the same number of sellers. There's enough of an imbalance so that the price makes a little bit of price move. But for the most part, more and more people are not going anywhere until all of a sudden the order flow goes into an imbalanced state, and the longs from up here begin to quit by putting sell orders in the market. And the move from this top area to this bottom area, that's called a liquidating move. And I'm going to show you how to anticipate where those price action points are possible and the potential is high. Now, I'm not saying that every single trade we do is a winner. What I'm saying is, in order to win, you got to know where the loser is and take the other side of his trade. So you need to know what to look for. If you can do that 55% of the time, you have a trading approach that's better than chance. And when you get started with me, I'm going to give you, out the box, I'm going to give you 3 winning edges that have a higher than 50% probability. So how is the money made then, you ask, right? High probability edge. How's the money made? Well, we're going to get to that. But here's the main difference. Here's what I want you to understand, is that what they're teaching is how to predict prices, how to study and analyze to predict where the market's going to go. What I teach is something entirely different. I teach you how to understand the structure of the market and how to play the game. So once you know where the price points are that are most likely to cause a liquidating event, you can be there on the right side. And you only have to be right about half the time. Because what I'm going to show with you next is going to blow your mind. Now look at this. This is really scary. I need you to take a lean in a little bit to the screen so you can read this, because this is really, really interesting. This particular chart right here shows the data set from 12 million real trades done by real traders, by FXCM Forex clients worldwide between 2009 and 2010. For those of you that don't know who FXCM is, they're a clearing firm. They handle foreign exchange, cash foreign exchange transactions on behalf of clients. And I want you to notice what you have here. What you have is a listing of the most popular pairs. And the green bar represents the percent of winning trades that all of their customers had against the losing trades, which are the red bars. So you can see, for the most part, people put on trades that won. In some cases, 60, 65, 70% winning trades, right? That's huge. But here's the interesting part. Nobody's making any money. This chart reveals the big problem that most losing traders have. The average pips won on a winning trade is half of what they lost on a losing trade. That's the bottom line for everything. You can't make money in this business unless you make more money on your winners than you give back on your losers. That's called the probability of ruin matrix. We cover that in our work. And also, it's called your profit to loss ratio. It's not the same thing as percent profits. On the previous screen, you got guys that are watching, hey, I got 60% winning trades. Great, but you're losing money every month because your profit to loss ratio is inverted. You lose $2 for every dollar you make. You can have 100% winning trades, you still lose money. 99% winning trades, you still lose money. You see what I'm saying? This is the real problem. So what is it that we teach in Net Winning Trader? We teach how to hold our winners. See, they teach how to make great entries. We teach how to make great exits. Because you can't make money unless you hold your winners longer in order to pay for those subset of the losers, right? So the big question people ask me is, well, if technical analysis is basically useless, that's my opinion. I'm not saying that you can't make money using it. What I'm saying is that there's easy money and there's hard money in this business. If you want to make easy money, or I should say easier money, you have to concern yourself with different things. Net winning traders do not think about things like technical analysis. And in fact, you can see that on the price chart that I showed you about what we teach, there's no analysis on it at all. I don't use it. I haven't used technical analysis in my approach in 25 years. Now, what's the difference? The difference is when I get in a winning trade, I hold it. So that's why people think technical analysis is a big deal. The more I learn about technical analysis, the more money I'll make. The reason they believe that is because what's really happening in the winning environment is people are holding their winners a long time or a longer time. So the benefit you get is from holding the trade, not from the entry. But the entry gets the credit because, well, I got short at the high for the week. Okay, when did you get out? When it crossed the opening range, I made $700 a contract. Good for you. But if you would have held it for 2 more weeks and bought it back at the bottom for the month, where would you be? Oh, I would have made $3,800 per contract. Okay. You see what I'm saying? Your analysis, well, great job using analysis to get short at the high for the week, but sitting on your hands, which doesn't take analysis, it takes commitment and perspective and discipline. That thing is what really made the money. The money was made by sitting tight. Jesse Livermore actually said that. Livermore wrote a book, How to Trade in Stocks. This is from a guy that made hundreds and hundreds of millions of dollars trading in stocks. You would think people would use his method. Even Livermore said, I never made any money trading. My method didn't make me a dime. He said, I made all my money by sitting tight. If I was in a winner, sometimes they surprised me. Wow, I can't believe that trade worked. Well, not going to touch it because it's working. And he would hold those trades sometimes for months. He said that. I never made any money trading. I made all my money sitting tight. But what if there were a better way than analysis and reading news and sitting there in front of the screen 12 hours a day? What if there was a better way? Well, that's the big question. Is Net Winning Trader the right program for you? See, what I'm trying to communicate to you is that what a Net Winning Trader does is different than what the typical average person will do with the tools and time and effort and money that they have available to them. A net winning trader operates on different time frames. Net winning traders hold their winners longer. They're making trades based on probabilities. They're not using charts to find a sense of certainty before doing a trade. They know their probabilities are 52, 53, 55% winning trades. So they know that if they make at least $2 on a winner for every dollar they lose on a loser, they're going to make money all the time. So they're not in a state of worry or fear. See, we talked about these two things, knowing what to do and then doing it consistently. Most traders don't know what to do. And then on top of that, they don't understand that doing it consistently is really the only skill you need. So that's really what's happening. A net winning trader is seeing it differently by having a different perspective, right? And then following a different set of rules, the rules that pay them. So it's really important to understand this, because I'm not trying to tell you something you don't know. I'm telling you there is no magic button. There's no holy grail of trading. Statistically, it doesn't matter what you do to enter the position. It doesn't matter. You could flip a coin. You could say that I'm going to use astrology. Every time Mars is retrograde to Venus in the heavens, it's time to buy gold. It doesn't matter what you do as your reason for buying or selling a market. It's everything you do after that that determines whether or not you're going to be a profitable trader. How long you hold it, meaning what's your plan for staying in? How often and how consistent you are with that method. If you're going to wait till Mars is retrograde to Venus, you're only going to have 2 trades a year. But you got to take both of them. And you got to manage them identically. One will lose, one will win. So who cares? You see what I'm saying? But there is no holy grail. There's nothing you could read, study, or absorb that's going to be the magic thing. There's only things that lead closer to consistent winning and things that lead further away from consistent winning. That's what I'm trying to mention to you, right? That's what I'm trying to make sure and hammer home. I don't know. Are any of you guys out there fans of The Mandalorian? I love the whole Star Wars thing. The whole universe is great, but The Mandalorian really impressed me. He said something very important about this concept. He said, persistence without insight will lead to the same outcome. If you're doing the same thing the same way all the time and not getting positive results, what does that tell you? Something needs to change. Now, you may already know that, but what has to change isn't outside of you, it's inside of you. Because again, what's our real problem? We know what our real problem is. It's fear. And everything that goes with it. Managing your emotion. Fear is the cause of inconsistency, and we have to manage that fear while we trade anytime you have money at risk. Especially if you don't have the confidence in the method you're using, or you're trying to use a really complicated approach like Elliott Wave, with a lot of rules that have to line up perfectly. And if you miss one, you're not doing it right. And that's not good, right? Like, it's going to create a harder time. It's going to make it more difficult to come to a conclusion about what you're looking at. All those, fuzzy subjective lines and dots and ratios and curly cues on a piece of paper, all of that. Well, let's simplify that down to the essential. The simpler and clearer you can get with your analysis. In other words, where's the order flow going to change? That's all I need to know. I don't need to know anything else. I don't even care what price that happens at. Where's the order flow going to change? Because when the order flow changes and all the losers quit, they pay me. They're the ones that cause me to win. I don't make any money by me doing anything. I make my money when all the losers decide it's time to quit and they bail and they drive the price against themselves, causing their losses, and I'm on the right side of that move. That's how I get paid. So other people decide if I win, not me. So that liquidating event is really, really important. I need to know where that is or where it could develop. That's very simple. Now, once we're in there, our risk is managed identically. We always manage the risk the same way. It's always the same number. Our winners, we have a set of rules that allow us to hold those trades longer. We hold them longer. Some guys have been in trades for weeks, getting paid thousands of dollars per contract. See? So depending on where you are starting from, you can find what you need inside the course I offer to help you manage this problem, this fear, which causes doubt, hesitation, second guessing. I got to wait for confirmation. All that crap that leads to losses. You know? So what is the difference? What are we really doing here that's different? Instead of teaching you somebody's opinion about what's going to happen in the market, we teach you how to manage yourself so you're in control. You're not at the mercy of what the market does because you're doing what you do. It doesn't matter what the market does. You're looking for a liquidating event. You're going to find it half the time or better. So you're going to get paid. Don't worry about it. You're in control. When you take a trade and it's a loss, it's a certain amount that you knew could go away, but your winners are always bigger than that, so it doesn't matter. Therefore, there's no fear to execute. There's no what if or should I or shouldn't I. We have a method for adding to winning trades so that once a trade is on and working, we leverage that. We make sure we get paid the most we can from that. You're in control. Nobody teaches that. Nobody teaches you how to be in control so you can get paid. They teach you what? Some bogus, ridiculous idea about what the market's supposed to do based on somebody's, I don't know, opinion. Which would you rather have? The ability to decide for yourself. You know, that's for you to be able to think for yourself and do what you need to do your way and make money at it every day. Isn't that really why you're doing this? That's the whole point. But you can't get there by walking down the wrong road. That's why the statistics are what they are. 85% of people trading in these markets, futures, Forex, options, or equities, the probability is they're going to close their account. If they've done any trading at all, they're going to close. 85% of people involved today, right now, they're going to close their existing trading account at a loss. Many of them will have more than one trading account during their lifetime and will close them all at a loss. I'm not saying that means it's hard to make money. I'm not saying that's going to happen to you. I'm saying, why would you keep doing the same things those people are doing if you knew different and you knew better? Being in control is the goal. I'm going to show you how to do that. So if your answer is yes, I'm ready to make some changes, then here's what I want you to do. I want you to consider me your friend in the business. I'm going to help you every step that I can. I provide you a complete program. It's designed to assist you in making a transformation from where you are now, taking everything you already know, but putting it inside the umbrella of how to use it like a winner does. If you're ready to open the door to a fresh perspective of thinking and behaving, then I can show you what you need to learn. The program is going to challenge you. It's going to ask you to put aside parts of your current method of trader participation. It's going to ask you to do some new things, different things. But I'm telling you, once you make those changes, your results will improve exponentially. You'd be surprised. In fact, I have testimonials of people that have done that so quickly, it was astounding, to them. And you could be for you too. So here's what you need to do. Go to my website, netwinningtrader.com. And while you're looking at the website and taking a look there's additional details there. And while you're looking up your credit card so you can buy, I'm going to ask you one quick thing. This is it, and we'll get back to work with Q&A. What's your escape velocity? Seriously, what's your escape velocity? Anybody know what escape velocity means? I'm sure there's going to be a couple of people who do. But basically what it means is this. If you want to leave Earth, There's a certain amount of velocity you got to have to break free from the pullback of gravity. Currently, that's 25,000 miles an hour. That's just, if you're an astronaut, you got to know those things. Every planet in the universe has a different escape velocity because of its density and its mass and its angular momentum and blah, blah, blah. But without that velocity, you ain't going anywhere. What's your escape velocity? How much escape velocity? Well, how much money puts you where you want to be? How much money do you need or want to get that lifestyle that you have always dreamed of? Aren't we? Isn't that why we're trading? To get our escape velocity. How much? I'm only about $1 million away right now, currently. I'm only about $1 million away from mine. You know what that's going to be? I got it right here on my desk, and you need to do the same thing. It's a picture of me standing on a white sand beach in Grand Cayman Island, looking out over the water on a piece of property that I'm going to build a house on. And that's where I want to live the rest of my days, with my state-of-the-art, ultra-redundant satellite hookup trading environment on the top floor. And you know what? That picture is right next to a picture of Jesse Livermore taken in 1922 at his height of his powers. Because I know what Livermore knows. And I know how to get that money. NetWinningTrader.com. This could be the start of something huge for you. What is your escape velocity? How much do you really want? Because you can get it. I'm telling you, it's there. Come and get me. That's what it's asking you to do. But you're not going to get a penny of it until you listen to how the market speaks and you make the changes you need to make. And the good news is that that's the information you've been looking for. And we can help you with that. Now, we got the floor open for Q&A. So I'm going to go ahead and just start with some Q&A. Let me look in here and see what we got. Okay, Zippy says, how do you watch order flow in FX? Okay. That's sort of like asking a doctor, how do you make a sick person well? That's an excellent question, but it's very general at this point in your knowledge flow. There could be anything, and that would be the challenge in the coursework that I will assist you with, which is how to recognize order flow or how to see when it's about ready to make its change using the data you get from FX. Some of it's not really readily available. Now in futures and options, because it's exchange traded and the exchange generates information, there's information you can get that will betray where the order flow is. But there is no technical analytical tool that is labeled order flow for anyone. Nobody has that. Okay. And that's when I said before, I hate talking about order flow to people that are not working with me yet because they don't really understand. They think it's a technical thing. They think it's just one more thing that they have to learn about how to study the market. It's not that at all. And it's hard to get the concept at first, but once you practice it, and I give you the skill set to help you with that, this is an excellent skill to develop, is how to look for order flow in any market. There's certain ways to get it. Now, when we do our live workshops every week, once a week, when you're studying the material, which the material is in audio video form, written material, and some tools I want you to use. When you're using all this and you come to the weekly workshops for traders, these are the kind of things that we address in the workshop. We have another Jason out there. Good. He says supply and demand. That's how I think. I don't know what you mean by that, but that's a good question. We could maybe pick up on that. Let's see. Tony says, can you explain more about liquidation pressure? Oh, absolutely. Okay. Stop and think about this. And this is something that I cover in a lot of detail with the material and in the workshops. I want you to ask yourself a question. What is it that you're trying to do when you trade? What is it that you're looking for? What you're really looking for is to make money. You want the amount of equity in your account to go up. Would anybody disagree with that? That's what we want. Why are we doing this? We want more money on Friday than we had on Monday. Would that be fair? No one would say that we would disagree with that. So, what is our time horizon for that money? It would be something that we label in our head, we label right now. So when somebody does a trade, the 85% of people who are losing at this at any one point in time, all day long, 85% of people are saying inside their head, I'm going to make money right now. They put a trade on and they're going to make money right now. And right now means usually by the end of the day for them, or in the next hour, or the next 20 minutes, because that's what they're thinking on that time frame. They're going to make money right now. So when they put the trade on, that's what their expectation is. Now the market goes against them. What happens? Their account begins to lose money. How fast is that happening? Right now. Their expectation was, I was going to make money right now, but instead I'm losing money right now. We can't have that. So at some point, the problem of the loss must be addressed. Otherwise, the loss could move to the point where this individual is losing all the money in his account. Now, the liquidation pressure could include things like this guy, this losing trader, is trading too big of a position. He's over leveraged. He might have enough money in his account to trade a 20 lot, but a very small move in a 20 lot will wipe out his account. So this liquidation pressure in his mind might be really, really big, right? The less the market moves. So he's got to do something sooner rather than later. So liquidation pressure is an emotional reaction to a loss in the market. When you understand how these people get in, their unmet expectation being damaged, then the pain of loss showing up in their psyche, and the fact that they must liquidate really fast because they're generally overcommitted, you can begin to see where that ebb and flow in the market shows up and becomes a liquidating event. Now, a liquidating event needs a precipitating event. That's why ahead of the news, you need to be very careful about where you're positioned or what to look for. The unexpected is a precipitating event. The close of the day is a precipitating event. The open of the day is a precipitating event. There's a lot of little things that can happen at any one point in time that causes people to say, it's time for me to do something. When they enter the close of the trade order, 85% of the time it's on the wrong side of the price action. Therefore, they're getting out of the market. So volume is something that you can monitor, and open interest is something that you can monitor for ideas about when a liquidating event is due. Also, one of the things that we teach in Net Winning Trader is that there's an ebb and flow in the marketplace due to the fact that all of the participants are operating on time frames that are too small to make money. That's called random noise. They don't know that. They think they're operating on a time frame that's going to make them money right now. But it's too small a time frame. And that time frame is 72 hours or less. So this ebb and flow in the marketplace that creates the liquidating event will happen pretty regularly, 2 or 3 times a week. So you've got plenty of opportunity to look for. All the time it's there. But liquidating events have to be set up, they have to gel and mellow, and then the guy quits. And that flows in a roll. You know what I'm saying? So I'll teach you more about that, but you have to understand it's not a technical thing. It's not look on a chart and circle this and draw a line here. It's not that kind of thing. It's an understanding of what causes people to bail and when they'll quit and what it looks like when they're ready to quit. You know what I mean? It's a great question, though. Jason's got another question. Are GDP and interest rates of a country good things to look at if you want to hold trades long term? Okay. The answer is no, because interest rates and GDP have nothing to do with why the markets move. People think they do, and this is part of the problem of analysis, why it doesn't work, is because people think that all this information drives prices, and it doesn't. What drives prices are people entering orders because they think GDP makes a difference and interest rates make a difference. It's the fact that the order is placed into the machine, that's what matters. Whatever reason somebody used to lean on so that they felt good about putting an order into the machine, that doesn't matter. It doesn't matter what it is. See, this is called the problem of shared data. Let me ask you to follow me on this, okay? GDP is a government-generated report. It's based on a set of conditions, and those conditions are well known by anybody trading in the markets. If you're trading bonds, you know what the interest rate is. You know what drives interest rates. You know what they look at. You know what the Fed's got to do. Everybody knows all the same information coming from the government. Everybody knows when the GDP report is created, what's included in it, when it's going to be released, what time frame it covers. Everybody has access to all the same information. And if you're trading bonds, Chicago Board of Trade 30-year bonds, the open, high, low, close for your 60-minute bar chart, let's say, looks the same on my desk as it does on your desk or Jose's desk or somebody else's desk. It all looks the same. So any trader anywhere in the world is looking at the exact same information and has available access to the exact same information. So if all this information is the same all the time, where does the difference in market positioning come from? Everybody's information is the same. If it was all the same and we're all logical, we would all come to the same conclusion about it, but we don't. Somebody looks at the news report coming out and says GDP is higher than it was last month and says to themselves, well, that's bullish because blah, 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 blah. And somebody else looks at it and goes, oh, that information, no, that's bearish. And here's why, blah, 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 blah. So how do you get two people, two traders, having access to the exact same information come to two opposite results? Because it's opinion. A net winning trader will tell you he doesn't care what the news is. He doesn't even watch it. I can promise you there are guys that I've trained that they're trading bonds, making money every single day trading, could not tell you what day NFP comes out, GDP comes out. They don't know. They don't care. That has nothing to do with how the money's made. But people think it does. So asking this question shows that your perspective is still in a place where it's going to be harder for you to make money than it needs to be. You could change that perspective and come to the same conclusion. That it doesn't matter what the news reports and information are because that's not where the money's made. The money's made when the loser quits and I take the other side of his trade. That's how the money's made. So if GDP is coming out on Friday, that's great. The only reason I care about it is if it's going to force the loser to quit. And if I'm on the right side of that move. If I'm on the right side of that move, I don't care what the GDP number is. It doesn't matter what the number is. What matters is that the guy who thinks it matters scared himself out of the market. That's all that I care about. Do you follow me? Is that making sense or no? Jason's got another question here. He says, yeah, it's making sense. Okay, he said this. He's got a question. I think it's a question. He said, speaking on the forced liquidation process, I know you said you won't be looking for anything technical in charts, but does the market create things like support and resistance areas? Yeah, let me just take 2 seconds and show you something. Now, again, I hesitate to show you guys this because I don't want you thinking that what we do is technical. You understand? But I'm going to show it to you anyway because it helps you understand a little better. Okay? So let's go ahead and do this real quick. Where is it? Okay, here we go. This is a 60-minute open, high, low, close chart of the British pounds. So each of these vertical lines is a Friday close. So this is 1 week's worth of trading. Now, just looking at this, forget what the red and green mean. That's my personal notation. You don't have to worry about that. Just leave that alone for now. But looking at this right now, what would you say to this being a resistance area? Would you say that that would be reasonable to suggest that that's a resistance area? Right? Would you say that's reasonable? Okay. So if that's a resistance area, how do you know that that's resistance? You don't know. But you can see quite clearly that there's no trade up here. So if there's no trade up here, that can only mean that at this price level, the order flow went from bid to offer. That's all. That's what that means. So if it went offer at that price point, how do you make money in a market where the order flow is larger on the sell side than on the buy side? You would be short from there. And what would you do? You would have to wait for the market to move down to some level that paid you at least $2 more than you lost on the other trade you did today. You see what I'm saying? That's all this is. That's it. There's nothing more to this game. Now, what causes you to get in and out of all these other prices in here? Whatever's in your head that's working against you. If you could say, I'm going to sell every time pounds gets to the 127.40 or 127.70 to 127.82 area, I'm going to sell it at 127.70. So my stop's going to be up here somewhere and wait to see what happens. Now, this is a liquidating event right here. This one bar right here. That was the longs quitting. The longs quit. Here they are buying the market, looking for higher prices. These are the late buyers in here. And then everybody quit because the news came out unexpectedly bearish. So are you short? Are you still short? At what point did you quit? You see what I'm saying? All of those issues are perspective based on how you personally decide you're going to play the game. But the market providing you the opportunity is really this simple. That's it. Now, some people make it harder than it needs to be. And guess what? That's when it's not working for them. They're not winning. So you have to ask yourself, how can I learn to recognize true support and resistance? Why did Jason draw his lines here and not somewhere else? Right? I can show you why that is. It's all part of the same experience. Now, once you're in, everything that happens after your entry is where the money is. So if you got in right here, made this 40-point move, and then held it all the way back up to here, and then quit because you didn't make any money, you gave it back, is that a perception that leads to your benefit? Would you need to discipline that perception? What if you just said, I'm going to sell it here and wait and see what happens, and I don't care about whether or not it comes back to my entry because I'm going to cover it at some lower price point. The market's been doing that week after week after week. There's no reason to think that that's going to change. And if it did change, guess what? So what? So what? So it changed. So you sold 27.70s, the market rallied away. Fine. One of the things that we're going to teach you is how to use what's called double your opportunity method. So it doesn't matter what the market does. It only matters what you do. So if you're on the wrong side, another trade could make up that difference if you knew how to position yourself most effectively. But the game itself, that's it. That's how it's played. People who make it harder than that generally are not winning. Good question, though. All right, I think I saw one or two other ones in here. Zippy wants to know, do the banks move the market to their advantage? No. There's no such thing as a manipulated market. I know that's hard for people to swallow, but there's no such thing. Maybe the Fed in the stock market, once in a great while, will encourage certain participants to move money in or out to artificially support or depress the market. But they can only do that for a couple of hours, maybe a day at best. Banks used to do that. They used to do something called central bank intervention in the currency markets years ago. That's where if a currency was devaluing or appreciating in value too quickly for the local economy to benefit from, the bank would step in and do the opposite. So if the market was selling off too fast, they would step in and buy it and hold the currency up, right? And they could only do that if central banks around the world all did it together at the same time. So it was called central bank coordinated intervention. And the banks did that for years and lost money on balance all the time. If a government or a central bank cannot control the value of its currency, what individual has the ability to fire the kind of firepower the Fed does? Nobody can do that. The only thing you can do is take advantage of the mistakes those banks make. But that's why they're not manipulating anything. They can't. They can try, and once in a while they might succeed for just enough time to make it look like there's a benefit. But in the final analysis, they're losing money all the time when they do that. Tony says there are tendencies that you can exploit that come from the thinking process behind what you see, and to anticipate what they will do if X happens or Y happens. That's correct. That's all you're doing, anticipating. A couple of yeses coming in. Okay, some great questions. Jason wants to know, how did you find out that this is a zero-sum game? What do you mean, how did I find out? Well, I don't understand the question. How did I find out? I mean, it's a zero-sum game because it's a zero-sum game. That's the way it's designed. They don't teach that for some reason. What I found astounding is that when I took my Series 3 brokers test, the issue of zero-sum market was never discussed. The implications of zero-sum transaction trading are enormous, and they should be on the test, but they're not. Again, why? Because the world is full of people that don't think. Anybody who's a real estate broker will tell you that the test to become a real estate broker has nothing to do with selling real estate. It's like in a condo, you own the paint, but they own the wall. You know, what? You know what I mean? And the Series 3 test is basically useless for managing trading. It doesn't help you anything, but you can't get a job without it. So it was never on there. When I started learning about the markets and discovered that the markets were a zero-sum game, when I read that for the first time, here's how the structure of trading is done. The buyer to every seller, seller to every buyer. Here's what that means in the market. And then I read a really good book by Mark Douglas talking about the psychological implications of zero-sum trading. It changed my life. But how did I find out about it? It's just the nature of the business. The fact that nobody told me that's how it worked until years later is just an indication of how ridiculous most people are in this business. Any other comments or questions? These are all great stuff. Listen, I want to ask you guys, thank you for coming, and I'm hoping that this is beneficial to you. The point I want to make And I hope the point that's resonating with you is that what I'm sharing with you can change your life. If you've never made $1 million in a year, ask yourself why you're not. Is that what you want to do? Do you want to get that good? Is your goal to become successful at this so you can quit your job and become a full-time trader from his laptop on the beach, like I have the privilege of doing? I'm not saying that to impress you. I'm saying when I got into this business and had to walk through the snow in downtown Chicago in my 20s, watching guys that were brain dead as far as I was concerned, making hundreds of thousands of dollars doing nothing. That's what I want to do. I want to sit on the beach and trade. How do I get there? Well, I took the long way around. I went through every single thing that you're going through. I studied everything you've already studied. I've forgotten more than most people will ever know about this business. Good riddance. Because the way to win is extremely simple, but at the same time, very difficult to admit you have a need for, because it's based on what? Your emotions. You need to let something go when you don't want to do that. That's okay. It might take some time. No worries. But in the final analysis, if what you want to do you're not doing, you need to make a change somewhere. Maybe this is the right program for you. Because I can absolutely promise you, you will learn what you need to learn to win. I absolutely know what that is. I can't promise you that you'll appropriate it well enough to actually win. That's kind of your side of the table. But I can absolutely promise you that you will know what you need to know to flip that switch. And that part is important, because what winning traders do is different than what losing traders do. You need to know what that difference is, because if you're still losing and not winning what you could win, the difference might be very small. Some guys that I deal with, they were amazed to find out that what they needed to change was one little small something, but they didn't know that. But the tools and the training exposed them to that, and they had the courage and the willingness to make those changes. So I want to really encourage you to do that. I don't want you to just leave here and say, "Oh, that was a great conversation that Jason had with us. You know, oh, that was great." It's some very intriguing ideas he's come up with. No, you want to make $1 million, or don't you? I mean, it's out there. I'm telling you, it's out there. It really is out there, guys. If you want it, maybe this will be the thing that helps you get there. And I will absolutely tell you that the one thing I can promise you is that I will give you 110% effort to help you get there. That is absolutely true. So I hope you will consider becoming one of our subscribers. I hope that you'll take the time to do that. Tony and I both are available. All you have to do is put info@netwinningtrader.com. Email us with your questions if something comes up later, or you want to talk. Some guys, they don't want to talk in here. They want to, talk privately. That's fine. I'm available. I'm a real person. I'm sitting here looking out my office window at the beautiful day that's developing here in South Florida. I can take a 5-minute, 10-minute phone call from somebody if they're interested. Go to the website where it says contact me. Send off an email that says, "Hey, Jason, would you call me? I have a question about your program. I want to know more about it, but I'm not comfortable discussing it in a room full of traders." Fine. We can do that. Not a problem. Tony's got all kinds of help that he can give you too. He's more technically oriented, but that's okay. What I mean by that is he can help with things like if you can't get started, you can't log in. Don't worry. We're going to take care of you. Let's see. We got a comment. See what he has. Oh, Richard does. Oh, hey, Rich. Rich says, "The most important concept I learned from you is to observe and not evaluate. This opened up for me everything you speak about. Coupled with understanding daily bias, it showed me how to discover order flow and where it is occurring." So when I first talked to Richie years ago, one of the things that he asked me about is, what does all this mean? See, now his thinking is into a whole different world. He was trying to figure out what it meant when something happened in the market so he could try to find a way to participate. What he came to understand is that it doesn't have any meaning. The order flow will change. It's going to change. Don't worry, it will change. Where is it more likely to do that? He understood that concept now. Observe, not evaluate, observe. Watch what's happening, not try to figure it out. I think that is huge. And that is one of the things we really cover. Did you know this, guys? This is interesting. Did you know that the term speculation is derived from a Latin root word called speculare, which means to observe? When you speculate in the markets, it's implied that all you're doing is watching. You're not evaluating. There's no intended result. There's no outcome you're looking for. You're observing. You're watching. That's speculating. Isn't that interesting? From the root word to observe. I'm just watching what's happening. I'm not trying to figure out what it means. I don't care what it means. I'm watching it. The higher the market goes, the more likely it is to stop and reverse. What's the most likely place that's going to happen? So the higher it goes, that's fine. I'll just keep selling it until I hit it. No big deal. I think, Richard, you're absolutely right about that. By the way, I want to ask you, Richie, while you're here, the thing that we talked about, I'd love to hear an update on that when you have time. It's obviously it's nobody's business how well you're doing, but I'd like to know just to see how well you've been disciplining yourself this last couple of months during the start of the year. So I'd love to see that or know more about it anyway. So feel free. Tony says, my biggest perspective shift was when I started realizing this is about thinking about what the other traders are thinking about, not about prices. He's absolutely right. What are they going to do if this price happens or that happens? How will it affect their account balance? He's absolutely right. That's a big deal. When you can say, you know what? If the other guy is going to do X when the market reaches Y, that's going to give me an opportunity. All right. Some great comments today. Rich says, great, I'll contact you. Please do. Great concepts. Good questions. What's this right here? Okay. Yeah, I think I covered everybody. Fruit House says, hi. Hey, how you doing? Glad you came. We're still trying to get you started, so please feel free to get back in touch with us. All right, guys. Any other comments or questions? I would love to answer them. We've got a little bit of time if you want. I mean, it's about 10 after 1. I typically go for about an hour, a little longer if you want. Okay. Says someone is typing. Richard Wills says, what is it that you're actually measuring? What is it you're actually measuring? I'm not sure I understand. Okay. Richard, it's important to understand we're not measuring anything. There's nothing to measure. You can't know what the order flow is going to be. Nobody knows what it's going to be. You can't. All you can do is anticipate about where it's due to change. How big the change is, how long it lasts, those are things nobody can know. But we do know several things about the structure of the market. First of all, the market is going to change in structure. The natural, normal, everyday business is called a state of imbalance. The market is always going to be in a state of imbalance. When it temporarily balances, that creates the opportunity. You need to know what the order flow looks like, what price action looks like when it is in a state of temporary balance, which will lead to a state of imbalance later. I wrote an entire book on this. It's called Time Compression Trading. And you're welcome to get a copy of it if you can find it. I don't know if it's still available at Amazon. In that book, I talk about the relationship between the winning traders, the losing traders, how they place their orders, what each of them is looking for, when they make a change, what that looks like, and how to see that in the market. You don't measure it other than you have to monitor things like volume and open interest. It doesn't matter what the volume or the open interest is. It matters when it changes. In other words, if the open interest has been on a steady climb, that means the professional trader is willing to take a risk and hold his position longer. So that typically means the market is under a trend, which is order flow imbalance to one side. So let's say it's uptrend. So when the order flow is consistently larger on the buy side than the sell side, the market is full of longs, and it keeps getting more and more and more longs. This is what's happening in gold right now. More and more and more longs. Then what will happen is the market will get to a price point where all those longs say, you know what, that's about it. I don't think I can make any more money in this. And that's about where the bears say, this is finally the top. When the longs decide to liquidate, there's going to be a drop in the open interest. That's what you're looking for. You're looking for the open interest to stop and move the other way. It doesn't matter what number it's at. It matters that it stops climbing and starts declining. That means people are liquidating. That can only mean it's a professional trader, because a professional trader is the only guy that would be in that market more than 38 to 72 hours. The average day trader or losing trader is in and out, in and out, in and out. The winner is going to hold that position, and when he decides it's over, the market is going to have less people in it. Now the market's vulnerable to a reversal. But if you don't know how to find that, you don't know what to look for, and you're looking in the wrong spot, and you're looking at things like overbought, oversold indicators, and where the market was at this time last year, and who's saying what in the papers, and that's what I'm saying, is that the typical focus that the losing trader tends to focus on isn't the information that causes the market to change in character. So we're not measuring anything. We're watching for the clues to change, if that makes sense. But it's a good question, let's see. Trayson wants to know, what does it take to be a consistent winner in this business? Okay. To be a consistent winner as a trader, here's what it takes. It takes a commitment to follow through on a high probability method. So you have to know your probabilities and enforce them. Your edge has to be better than chance, which means it has to have something behind it based on order flow. Last, you need a winning profit to loss ratio. You must make at least $2 on a winner for every dollar you give back on a loser. Now, those three things, that's what you need to win. If you can do those three things consistently, good for you. But most people can't get to that without help, because they don't know what they're doing right and what they're doing wrong. They don't know how to create an edge. They don't know how to enforce an edge. You see what I'm saying? Is that it's knowing what you need to do is not the same thing as having the skill to be able to do it yet. So I would encourage you to consider opening the door to what we do. At least keep a finger in it and see if it'll make sense to you at some point. Tony says consistency is about managing the fear of trading. You do what you intend to do, even though at first you might have more fear. But we have a product for that. He's right. It's called the Doubt Destroyer. The Doubt Destroyer process. It'll teach you a way to keep more control over your actions, which is what you need. Also, we're going to be sending out more emails that will touch on all these subjects. Right. Okay. So Tony's right. To answer your question, we're going to have more for you coming, and there's more data on the website too for you. But those basically, it's those things. You have to know what your edge is and how to enforce it. You have to be able to follow through on a consistent, high probability plan. And you need to know how to create that if you don't have it. You can't waver from that ever. And you've got to take more money out on your winners than you give back on your losers. As long as you do that, hold your winners. As long as you do those three things, you will win. Or I should say, you have the highest probability of winning. We don't know how close you're going to come to that. Okay, someone is typing. That's good. Keep them coming. Mohammed wants to know why you not include or buy or sell the Swiss pair. What's the reason for this? Well, okay, there really isn't any reason other than personal preference, really, Mohammed. I trade 4 pairs. I trade British pound, Japanese yen, Canadian dollar, and the euro. That covers all competing economic environments, East, West, European, against all the others, right? The Swiss franc is slightly different than all those other pairs because that is a currency used for tax reasons, import, export. But the vast majority of currency transactions are done in the US dollar against those 4 major pairs, like 90% of them. So 80-90% of the world's money is flowing through those 4 pairs. That makes it very liquid, impossible for anyone to manipulate. So that means that trading signals or trading opportunities are going to be very clear. And people that are trading in those markets are winning traders. So they're not going to push the market needlessly. So it's going to have opportunity fairly consistently within it. So that's why I trade those. And 4 pairs is plenty of opportunity to make, all you need. I don't know if that answers your question, but that's what we do. Tony says there's a video on the site right now that actually touches on why we don't want to say trade this or trade that. Right. The learning of what is behind things are more important and most valuable we can provide. Right. What he's saying is we don't tell you what to trade. We show you how winning traders operate. It doesn't matter what the market is. The market itself is incidental. So how long is your usual trade in time? That's a good question. I never know what it's going to be, but they typically are less than a week. Part of that is because of volatility in the market and my rules. So for me, the perfect trade is one that goes far enough, long enough, so that it doesn't come back to my entry point according to my rules. So if I'm in a trade and I'm stopped out at break even, stopped out with a 25-point gain, that's like half my trades are like that, because the market I'll get my entry point, the trade will work. I might get 100 points open trade gain on it, but I'm looking for that to be like the monthly high or the monthly low I'm short from or long from. And the market then immediately has some reason to bounce back and forth in between that price and my entry. So I'll get stopped out on whipsaw. That's real common. But if I, like in the case of the pounds, sold it into the resistance area earlier in the week, and then Friday, this big news report comes out and it makes a big move and it closes near the low of the range, I've got an exit order working. That exit order might still get hit. If it breaks down to the bottom and it looks like now we're short a market that's going to extend the range for another 2 or 3 or 4 weeks, then there's a different reason for moving the stop to lock in a profit and then add to that position. So that's less than 10 or 15% of trades. Most trades are held less than a week just because that's what the rules say. But the trade I'm looking for is one that goes my way forever and I never take off. I'm holding it 10 years from now. That's what I'm looking for. Tony says he's talking about a topping market where everyone is thinking the same thing, that it's going to keep going up forever. Right. That's a topping market. Mohammed says it takes a steel gut to continue to sell in the topping market. But the outcome is not clear, and you lose until it turns around. Right. Well, that's true. Tony says we aren't teaching topping in the course. That's correct. Yeah. So another thing about the coursework that's good for you guys to know about is it's not a brain dump. It's not every single thing that I've come to understand and learn over, almost 40 years of trading. What it is a very concise, distilled down method of exploiting a handful of edges and the real tools that you need to win. You can go with this information and leverage it into all different kinds of things that you personally want to put your time and effort into. If you want to learn how to sell into a topping market, that's a different skill than buying or selling resistance and support. It's a difficult skill to learn. And the same methodology of proving out your edge, testing your edge, learning how to manage your risk, all of that is the same. So the skill set that we're teaching is like the fundamentals. It's the basics that everybody needs to win. And then once you have that down and you're doing better, you can start to improvise and create your own methodology as time goes on for other things. See, the truth of the matter is you only need one edge. You only need one edge. You have to decide what that's going to be, exploit it, build some money in your account. Then you can look for a second edge or a third edge or a fourth edge, right? And give yourself 4 times as much opportunity. So in the coursework, I actually give you 3 edges. And so you can choose which one you want to work with or use them all. But we aren't teaching topping in the course. That's a good point. Great questions so far. Anybody got any other comments they want to spend a minute on? Okay, this is a little bit bigger one. Tony says, we sat down and talked about answering the question, what can we give someone who's never done this, or has been trying but not successful? What can we create that guides them with all the key pieces so they get profitable quickly? That's what we did. We don't want to overwhelm anyone. And that's what we decided. It took months. Really, Tony and I worked together on it for months. And we really tried to make it short and effective as possible to make sure someone can learn and use it in less than 3 months to get what they want. He's right. He's absolutely right. Again, we can't promise profitability because we don't know how well you're going to apply the knowledge or what your personal issues are that might prevent you from applying the knowledge. But the knowledge is there and it's available. Anybody else got a comment, question? Anybody else want to spend a minute? I mean, there's some good questions that we've had in here so far. Been pretty happy with the turnout. That's good. Oh, before I forget, if you decide you want to get started, we have 2 choices for you. One is a payment in full, and that will be at a slightly lower price. If you would be more comfortable making a payment on a regular basis, then we have a payment plan available that is slightly more, but that is because we have to spread out the payments. So if there's any questions about that, feel free to hit the contact us page and just say, hey, look, what are my options on a payment if I'm interested? We'll be doing our first broadcast for workshop on this Saturday. So you need to get started before this Saturday or until we're full. One of the two. I mean, if we, between this broadcast and the one we're going to do early next week, for all those that couldn't get in here today because we were overcommitted, we may fill up. So if we do, then someone will have to wait maybe until next quarter. But for right now, there's some spots available and you can get started one of 2 ways. You need to make the commitment before next Saturday, because next Saturday is when we're going to start the process of working with the tools on the site and our regular weekly workshops where we take trader comments or questions in intimate detail to help people see their way to understanding the concepts. Info@netwinningtrader.com. Is there any time for comments or questions? So feel free to type those in. Tony says, yeah, set it for February 11th. Oh, that's right. February 11th is Sunday, not Saturday. I do that every time. I always think it's a Saturday. But Saturday the 10th, we'll be doing our first workshop for those who are signing up now. So someone may miss a workshop on Saturday, but that's all if you do that. Plus, we're going to record the workshops and make those available to the attendees for the quarter. So you don't actually have to be there. It's better if you are, but you will get the same data either way. Also, don't forget, if you get started right away, I'll do what's called an onboarding call. I'll spend a minute with you just to make sure that we're on the same page and that we're going to do right by you, find out what your trading issues and concerns are, and make sure that you're getting the best help that you need. When you sign up today or earlier in the week, you can expect to get in touch with me. And you can get in touch with me anyway. James says it's Super Bowl Sunday. Oh, yeah. Okay. Super Bowl Sunday. Well, hate to say it, but I'm not a football fan. I have no interest in football. I'd rather die from paper cuts than watch a football game. Let's see. Sizwani has another comment real quick. What is the best way to manage greed and fear and impatient? Not being content, I invite losses, I observe. Well, okay. You're asking a question that we address inside the coursework. And we offer tools to help you address these issues. But the key component here is the fact that you have emotions that are interfering with your trading. That's what you're saying. What we show you is ways to keep your emotions in check or disciplined. It's not that they're not there. It's that they don't interfere with your trading because you have made a choice and a decision to enforce a set of rules about how to participate. So if you have decided or figured out that greed is causing you to get back into a trade after you've been stopped out and you don't wait to get out, and stay out, right? What we do is we give you tools to enforce a set of rules about getting back in. Like something as simple as if I'm stopped out, I have to wait 1 hour before I can do another trade in that market from the same side. So we enforce that rule, make sure it's present in your thinking, and then you're held accountable by me looking at your trading results. So when I look at your trade results, this is where partly what is important for you to understand about coaching and mentoring and how it works, is that your trade I can look at your trade results and tell what you're thinking because I know this business that well. It's sort of like if you had a brain surgeon look at a brain scan, he can look at it and say, oh, that person is suffering from Alzheimer's, or that person is suffering from schizophrenia, right? I can look at a equity run of your trading results and say, I can tell what you're thinking. You have a problem with greed, or you have a problem with fear. And then I can give you tools to help you with that. So you can independently, on your own, learn to manage those concerns so they don't influence your trading anymore. That's the goal. I think what you'll find is that you won't have any greed or fear issues once you know something. And that something is really simple. Here's how I put it in the coursework. Once you know why you do what you do, the way you do it, trading will become effortless for you. So if you have a fear or greed or some other problem like that, which almost everybody does, the important thing is to understand that it's unique enough that we can't address it until we actually see where it's coming out. Everybody has it. You're not going to get rid of it. You're going to manage it. Everybody has it, but it's gonna and everybody deals with it, but you're gonna manage it so that it doesn't affect your trading negatively. And you'll learn that why you do what you do, the way you do it. Once that's clear to you, you won't have fear, greed, or any of those issues at the same level. There'll be very, very, very small problems, if any problems at all. Okay, this is Tony said, this is the challenge. If you know what to do to win, will you do it? Or are you going to let your emotions interfere? That's the final challenge over time. And by practicing this, you get to be consistent. There's no magic bullet like we talked about before. It's a skill you learn. It's like riding a bike, right? You learn to balance by practicing riding the bike. Like if you're learning to ride a bike and you got bumps and bruises, that's the sure sign that you haven't learned the skill yet. So losses are the bumps and bruises that say you haven't learned how to do this yet. So having losses is not a problem. You got to learn what that means, how to confront them so you can learn from them what needs to be learned, so you can then reduce the amount of losses and increase the amount you pull out on winners. That's all you have to do. Richard says that's exactly correct. That was a breakthrough for me. That's right. Yeah. Yep. Managing the emotions, not allowing them to hurt your trading. Right. I still get them. I still do. I mean, look, I've been trading for almost 40 years. Okay. I still have losing trades all the time. You're never, ever going to be in a position where you don't have losses. So you have to accommodate that in your thinking. Losses are part of the game. How does it happen? I got to stop losing. Why? You don't have to stop losing. You have to manage your losses. Make sure they continually stay as small as possible. Always make sure that your winners are bigger than your losses. That's all it is managing what you do. And that involves not letting your emotions decide for you what risk you're going to take, what trade you're going to put on, how long you're going to hold it. All those things need to be clear, written in stone. All right, let's see what we got here. Rich says, that was a breakthrough for me, right? Okay. Any other comments or questions? We're coming up on an hour and a half, guys, so I don't want to keep you unless you can leave at any time. I hope you'll take some time to seriously look at what we have on the website, decide if it's the right course for you. Tony says, this is what's accounted for in the trading approach. It's why we hold winners, so that the net effect is we have a winning profit ratio. That is correct. If you have a short time frame, you can't hold, and you have issues being profitable. That's for one example. Yeah. It's another thing that you'll learn is that winning traders are on a longer time frame. They're not looking to make money right now. They're looking to make money when you can't handle your loss anymore. So you want to make money right now? Fine. You'll lose. I get your money. So when you finally can't handle it anymore, okay, that's great. Now I'm making money. How big is that liquidating break going to be? How long will it last? See what I'm saying? So their focus, their perspective is on something else entirely. That's why they hold winners longer on a higher time frame, because they know the losing trader can't handle it past a certain time frame. All right. All righty, guys. I don't know. We still have a fairly good group of people in here, but I'm not seeing a lot of comments or questions, so I don't know if we're done yet. Are you guys good to go, or do you have a few more questions? If you do, feel free. And again, some people are not 100% comfortable putting their questions out in front of a group of people. All you have to do is email us at info@netwinningtrader.com or request a call back, and I'm sure I can take some time next week and get with you. We'd love to have you either way. Obviously, you have to make the decision as to what information you still feel you need in order to flip that switch from lose to win. Or if you are a net winning trader already, if you're already winning, to really make yourself successful, to take it to a new level, those are issues too, but I know you have to make that choice on your own at your level, and we would never force anybody to do anything. But I will tell you with complete confidence that if you're not making the money you want to make, if you're not, it's not happening for you. The answer to your problem is out there. I think I've got the answer to 99% of those issues because I've been through 100% of everything you can go through, and I'm still here, and I know how to win. So I think I can help you. But it's up to you to decide if this is the right kind of program. And we'd love to have you. That's the best way for us to decide. And by the way, just FYI, I know this is going to sound crazy, but I've worked with a lot of traders over the years and have asked them to participate with me for literally months. We've had training, usually it goes 6 to 8 weeks on a minimum basis, a full-blown psychology of trading course that I can offer, of which this is a distilled portion of that. That's the essential, boiled to the bottom, really, really critical things that you need to learn. But in the big course, I interview everybody and talk with them. I've turned down people who were ready to pay to go and get involved, because after talking with them, I realized they're not going to get anything out of this. It's not the right thing for them yet. And if that's you, I would tell you that. So if you want to do a call with me before you do anything, I'll tell you if I don't think this is the right thing for you, or trading maybe not be right for you, I'd be happy to tell you. I've told people that. Listen, this is not for you. It saves me the frustration and pain of having to deal with someone who's just not ready or not going to get it or whatever, whatever their issue is. And it saves people, the frustration of spending money for something that's not really going to help them yet. You know what I mean? I can tell you that from, I can make that commitment to you that if this isn't right for you, I would tell you. But if you're on the fence and not sure if this is right for you and you'd like to know more, then that's why we're here. Rich says, I'm good to go. Speak to you soon. Okay. Thanks, Rich. Appreciate you being here today. Tony says, looks like we're done. Yeah, I think you might be right, Tony. Yeah, okay. I see some people are starting to leave. No worries. Okay, listen, guys, thanks again for coming. Appreciate you taking some time out of your Saturday to have a look at my product offering. Hope to hear back from you guys. Some of you, I hope, will sign up. And again, if there's anything we can do to help assist the process, both Tony and I are available. Feel free to either send us an email or contact us through the site. If you'd like to spend a minute talking before you do anything, we're available for that. In the meantime, I hope you guys enjoy the rest of your weekend. And I know that there are some big football fans out there, so don't blame Taylor Swift if the Chiefs lose, although I think that's what's going to happen. In any case, have a great day, guys. Thanks for coming. We'll talk to you next time. Thanks.